Hey everybody, good to be here today. My name is Brent Moore. It's time for Long Options. New class for me. I'm glad to be teaching you this class. Today I just want to go through a sample practical trading investing plan for trend trading long options. Simple as that. So we're going to do that here in just a few minutes. Let me go through the disclosures and then I'll tell you a little more detail about what we're going through and why we're doing that. But I'm glad to see you. I see some familiar names there. Appreciate you all. And some of you I've seen in person not too long ago at the Houston workshop. So glad to see you here as well. Cam's in chat, helping me out on chat. So I appreciate Cam. You can follow Cam or myself on X at Brent Moore CS, at Cameron May CS for additional content there. I also encourage you to subscribe to that Trader Talks channel. Options, which we will obviously be covering in this class, do carry a high level of risk and are not suitable for all investors. And the information today is for general informational purposes only. And it's not a recommendation of a security, strategy, or chart type. For the sake of simplicity, examples I'm going to go through. I'm not going to go through commissions on all of those or trading fees on all those. So just make sure that is an important consideration. Paper money application is for educational purposes only. Past performance of any security strategy does not guarantee future results or success. Let's see. There we go. Yeah, I'm going to go through, I'll use specific examples today, specific stock symbols, specific options. They're not recommendations there. Okay, so there we go. I'm going to bring up my Thinkorswim here. But let's just talk about this series for a sec, because this is long options, and there's different ways to do long options. I'm going to, over the weeks, go through trend trading. Well, we'll be doing that today. Swing trading. We'll talk about leaps. All things long options. So we're going to do all those. We'll do bullish and bearish. We'll try and hit both of those up today. But today I'm going to focus on trend trading these options. Trend trading these options, both bullish. So if we're trend trading a bullish stock, we'll be looking at a long call. Bearish, we'll be looking at a long put for trend trading. And so my plan here today is to, number one, go through a sample plan for you. And it is a sample. It's not a recommendation. It's a sample. And then two, go through specific trading examples on paper money to kind of try and illustrate those. All right? So fair enough. So what I'm going to do is I'll get back here in just a little bit because I have a couple scripts on my end. I'm not usually a big script guy here in my classes, but I thought for this class it may be easier. I'm going to go through some of these scripts in just a little bit to maybe help us out. You don't have to use them. I very often don't use them, but we're going to get to that in just a minute. But before I do that, let's go through a sample investing plan. We do have sample investing plans in some of the courses that we have posted on the schwab.com website. Not a specific one. This one's unique from those. But if you like their format, feel free. Great formats, great examples to use. And but here's the format I'm using today. I just kind of a skeleton here. I'm going to type in the stuff here, the guts of this plan here as we go through this. But when I'm doing long options, and this is going to be true for almost any option trade I'm doing, in terms of watch list, I'm just going to focus on liquid stocks with potentially liquid options. So therefore, what I'm going to do is for our purpose, I'm going to just say our example today, I'm going to use the S&P 100 stocks. Okay. Now, there are some stocks out there that are fairly liquid that aren't on this list, and there's probably some on this list that maybe don't have the most liquid options, but that's kind of an example. We need to narrow it down. There's a lot more liquid stocks out there than there are liquid options. That's always a huge concern with options, so we'll be talking about that, not just today, but going forward in this series. All right, and for those of you who are watching, Yeah, this class is recorded. It should be posted hopefully within a couple hours of when I'm done here. I can't control everything. If it happens to need an edit or something, then that will delay it. I'm going to do my best to prevent that, though. Okay, let's talk about buy rules. When would we buy? Well, let me just mention this. And this is something I've mentioned in plenty of classes out there. And that is when I'm considering technical analysis, and this is going to be kind of a technical analysis focused type class, because you can use fundamentals here. You can look for, it's not bad to add fundamentals to this plan. I don't have fundamentals on this plan, but you can use fundamentals. But when I'm talking about technical analysis, we're going to be looking at the trend. We're going to be looking at support and resistance levels. We're always going to look at those. And we're probably going to look at momentum as well. Okay. And so some of these rules that I'm going to talk about are going to fit, looking at things like the trend and the momentum here. So when I say buy rules, example buy rules would be trending up. Okay, stock's trending up. So you can look at that and the technical or down, I guess, in the case of a downtrend, okay? In the case of like looking for a long put. And the traditional definition of a trend is a series of higher highs and higher lows, or a series of lower highs and lower lows in the case of a downtrend. Okay, that's what we're going to look for on that. For our purposes, I may use a 10 EMA / 30 SMA to try and help us identify that trend. Okay, I'll look at specific examples in just a little bit there, but trending up is the key. Whether you use as moving averages or not, that's not necessary, but the trending is part of this plan. There's no doubt on that, okay? And then we're also going to be looking for some momentum to get in. Still check out the support and resistance thing, but we're going to look for momentum. And so specifically on that, I'm going to be looking for either a hold. Okay, that's a close above the high of the low day if you're not familiar with us. I'll show you what that is, okay? A close above the high of the low day, or a close below the low of the high day. That's for a bearish trade. So in other words, a bounce. We want a bounce entry. Whether you in your plan decide if you want to kind of do something similar, you don't have to do exactly a hold, what we define as a hold, but what I'm getting at is we're looking for a bounce to try and enter, or a breakout as an entry, okay? It is 10-day EMA. So this is what I have specifically. So Daniel's asking, is this a mistake? Did you put a 10-day EMA and 30-day SMA as a mistake? No, that is not a mistake. 10-day exponential, 30-day simple. That's what I have in my chart. If you want to use simple moving averages, let's be honest, there's not a huge difference between exponential moving averages and simple moving averages there. In fact, I was looking, and really, it depends, but more often than not, when you're using moving averages, a 10-day simple moving average, a 10-day exponential moving averages is pretty similar to like a 9-day simple moving average. Okay, that's usually how it works out. Not a huge difference. I don't care which one you use, but that's what I have on my charts there. So good question. So let me just, to make this a little bit more clear, I'm just going to bold some of these areas here. Okay, let's move on. Option specs. So that's going to be our buy rules. Those are our buy rules there that we're looking at. We want a stock that's trending up, and we want a stock with momentum. Okay, we'll kind of keep this neat and aligned there. Option specifications here. What am I looking for on option specifications? What I'm going to say is I'm going to look for an expiration. And now remember, this is a trend trade. In future weeks, when we get to swing trades, this is going to be different. But for today, for our trend trade, I'm going to say somewhere between 50 and 120 days till expiration. Days till expiration. Okay, that's the first thing we're going to do when we're looking at those. Okay, number two, I'm going to look for a strike price. The strike price I'm going to choose is going to be somewhere between like a 60 to 70 delta. Okay, so we're going in the money a little bit on that. You don't have to. Sometimes you may not even find a delta that's between 60 and 70, depending on the option you're looking at. So you have to go outside of that. You could go to a lower delta, maybe a little bit more of an aggressive trade in that sense. You can go to a higher delta, going to be a little more expensive. And there we go. Okay. Now, Daniel asked a good question. I'm going to try and address that because it's one that isn't just applicable to him, but it's applicable to all you. Because I've thrown out a couple terms here. I've thrown out this swing trading term and this trend trading term. Let me address those, but let me just finish these option specs here in a sec. The last thing I want to say is my bid-ask spread. I'm going to say, in general, I want that spread to be less than 10%. Okay? In other words, here we go. Let's say we have a call option or put option, doesn't matter, and the option price is $2. Okay? What I'm going to say is 10% of $2 is 20 cents. Okay? Math's pretty easy. 20 cents. Therefore, I would not want my bid price, assuming that's the ask price. In that case, I would not want my bid price I want to be less than 180. Okay, so that's when I say 10%, that's what I mean on that. Okay, now let me address some other questions. Could we add implied volatility on this? We could. This is a good question from Wiley. I'm not going to specifically here, but when we are doing long options, this is going to be true for swing trades or trend trades. When we're doing long even leaps, when we're doing long options, it benefits us if implied volatilities are low, because we get to buy for cheaper, spend less on it, and if after we buy it, those implied volatilities go up. That would be the ideal situation. Okay? That often doesn't work that way. Since implied volatilities tend to go inversely to the price of the stock, puts may benefit a little bit more than calls, because if the stock's going down, implied volatilities may tend to go up, and that can help you on that. But we'll see. So I'm not going to put that on there. Probably not a terrible thing to look at, but I gotta kind of cap it somewhere on this. And usually it's not as big a factor, I would say. Now, I keep saying swing trade, trend trade. Here's what I'm saying. Let's say we have a stock that's been doing this, okay? This is a stock that's been trending up. If I look at this stock and I say, I want to try and get in on one of these lows and get out when we hit this kind of target price here, that would be a swing trade. It's swinging up. Okay? Now, look, you may look at this and go, oh, that's, I want to get in there and get out there. Well, easier said than done. Let's be honest about that. But that's the goal here on our swing trade. On a trend trade, what we do is we look to get in. Okay, and here's that bounce I mentioned earlier. There's a bounce we may try and get in on. But we're not going to we're going to go, well, look, we're going to say, the stock goes up, the stock goes down, right? But the general trend is going up. Here's my general trend. As long as that general trend is continuing to go, I'm going to stay with that trade. I'm not going to worry if the stock pulls back a little bit. That's just part of stocks. That's what they do. They don't go straight up. Okay? So therefore, when we do get to exit rules, which we'll get to in a minute, we're not going to try and get out when the stock starts to turn down just a little bit. But if the trend breaks, that's when we're going to look to get out of those. Okay. I'm hoping that makes sense there in terms of swing trade, trend trade here. Okay. So there's my option specs. Let's go. I've got a couple more categories here. Then we'll go and try and look at the market and see if we can find some that fit the bill, so to speak. Risk management. What I'm going to say is I'm going to risk 1% of my portfolio here. And when I say that, I'm going to assume, big assumption, you guys know the expression with assuming, I'm going to assume for that risk calculation that we're going to get stopped, that we're let's see, how do I word it? We're getting stopped out at stop price. So the reason I say that, the reason I call that out is stops aren't guaranteed, right? If we put a stop in at $50, it doesn't mean we're getting out necessarily at $50, right? But that's what I'm going to assume for that risk management here. Now, furthermore, for our purposes in this portfolio, I'm going to assume, just going forward, a $100,000 portfolio. So therefore, I don't want to risk more than $1,000 on any trade. Okay, and that's my risk management there. All right. So I'm just going to, now you have your own portfolio. Maybe your portfolio's $10,000. Maybe your portfolio, and a 1% risk management may not work if you have a $10,000 portfolio. Okay, because you may have to buy a contract, you may have to up that a little bit, right? Maybe you have $1 million portfolio. I don't know. For our purposes, I'm going to assume like a $100,000 portfolio there. Okay. All right. So let's get to exit rules. And I've got a bunch of these exit rules here that I'm going to talk about. Okay. So I'm going to say, we're going to use stop losses. I'm going to say stop loss, and I'm going to say 1%. Now, what, could you use an ATR type stop loss? You could. When I say stop loss 1% below or above in the case of a bearish trade, either the hold low or the explode high price. Okay, we'll look at that here. Now, this is not a stop loss on the option itself. This is looking at the chart and saying if the stock goes below here. In other words, when we're looking for that bounce entry, let's say the stock's been going up, trend's been going up, and it goes up and it kind of comes down here and it looks like it's bouncing here. Okay, it looks like it's bouncing here. This isn't what I'm going to say that low price is right there on the stock, not the option. I'm going to say I'm going to go 1% below that. And I'm going to say that's where I'm going to exit. Okay. So we're going to put an order. I'll show you to do those types of orders where we exit if the stock breaks below that level. Okay. All right, let's move forward. I want to make sure I have enough time to get through this and get some examples in. So that's the stop loss. Now, here's the other thing. Sometimes we may not use the hold or explode. We may use stop loss below, above, breakout. Instead of hold, and we're going to do breakout. Breakout low or breakout high price. Okay. So here's our stock. It's been going more or less trending up, but it kind of had some trouble there. Kind of had potential resistance here. What's our breakout? Oh, we break out above it. Okay, we break out above it. Here's that price. Here's that breakout price. I'm going to go 1% below where that breakout price is and look to exit there on that. Okay. So there's that. Let's keep on going. We've got a few more rules here for exits. Let's see. another alternative, I'm going to put a stop loss on option at 60% of purchase price. And the thing is with all these stop losses, whether I'm saying I'm going to exit based on the stock price or the option price, we may move those up if the trade progresses well. We may move those up, tighten those up to try and help protect ourselves, even though they are not guaranteed. Okay, we're going to exit on a trend break. Now, very often we'll get stopped out before we ever have that trend break, but maybe not always, so we'll do that. I'm going to exit or roll 20 days before expiration. And the final one is I'm going to exit or roll when hit 85 delta. Okay? Oops, delta. Why? That's kind of a weird one, isn't it? Why would we roll when we do this? Look, how do we get to an 85 delta? If we're starting at a 70 delta or a 60 delta and we get to an 85 delta, you know what that means? It means we've been doing really well, okay? If we have a call option and if we buy a call option and we're starting with the 70 delta, say, and the stock keeps going up, what's going to happen? The option's going to go to a higher delta typically. Let's say we get up to that 85 delta. Well, what happens there? That means that not only have we made a bunch of money, probably, most likely, at least, an unrealized gain, I should say, but if we then roll it down to a lower delta, we'll be able to bring in a credit, number one, okay? We'll be able to bring in a credit. Also, we may lower the risk a little bit here on that trade. We bring in some money, roll it back down to that 70 delta. That means if the stock does reverse itself, it's going to move against us a little bit slower because our delta is going to be lower. All right. So Neil says, hey, are these independent? Yeah, whichever is first would be the first one to go. Okay. So if I haven't hit a stop loss, but I do have a trend break, we exit out. If I haven't had a trend break, but I hit the stop loss, we'd exit out. So it's the first one that takes place. Good question there. All right, that's it, folks. That's the plan. Now, I haven't mentioned every scenario in the world out there in this plan. I fully admit that. But I think it's a pretty decent sample plan here that we're going to start with. We'll kind of tidy that up so you can see that maybe in one. Can you see the whole thing? Yeah, you can see the whole thing there. Okay. All right. Now, Natchez says, can you provide a link? No, I can't. I'm sorry. I'm not allowed to, but I can't prevent you from taking a screenshot here, could I? So I'll let you do what you want with that. I can't send out links on that. And remember, this is a sample plan. It's not a recommendation. All right. So let me do this. Let's look at some examples and let's look at those scripts that I mentioned here at the beginning. We're doing okay on time. So I think that's, we're off to a decent start here. Also, by the way, this is on the Trader Talks channel. If you guys ever want to rewatch, you can. If this recording should be dropped probably a couple hours or so from now. And then you can pause or whatever. I don't know. Okay, here we go. Now, I mentioned a few things. By the way, I put some scripts on my X account yesterday. And the scripts were for this. This is just a 10-day exponential moving average and a 30-day simple moving average. So why did I do this? All right, why this? Look, a crossover is a kind of a simple way of that people can look at trend. I think with the cloud shading here, I have green and red. Green is when the shorter term moving average, in this case, the 10-day, is above the 30. And so that's kind of green. You can consider this kind of uptrend, more or less, more or less. This is going to be downtrend, more or less. Why do I say more or less? Here's why. Look at this. MCD. And at any given time, you're going to have a stock that one moving average is going to be above or below the other. Well, look, McDonald's has been going nowhere. McDonald's has been going nowhere for a little while. For a little while, it's green. For a little while, it's red. I'm not going to call that a trend. Okay. And so there you go. So that's why this is an aid. You can see, oh, nice uptrend there. Oh, downtrend there. But this isn't an absolute foolproof thing for determining your trend. But if this is helpful to you, I have a script for you. It's on my X page. Also, I have scripts right here. Hold on one sec. I have scripts right here. Scripts are not guaranteed for accuracy or time. Okay, they're for educational purposes only. Hopefully you find them helpful. If you want to pause the video here on this, you can. I posted the breakout script and the 1030 script on my X page yesterday. I did not post that Kahold Kablod script, but I'll tell you what, I will put that in the chat here for you, for those of you watching live. Otherwise, you can always just pause the video if you're watching on video, if you're not watching live, and just put this in, and you can add that. Okay? All right. All right. Let's go to, so that's our trend help. Let's go and let me do this. Remember, I said we want trend, but we also want a bounce or breakout. You can just go through and find a stock that is bouncing or breaking out. Let me do this. I'm going to pull up American Express. Okay. Again, I'm using this S&P 100 list. American Express has nothing on my script here. What I was thinking, though, I'm going to zoom in just a little bit so you can see it a little better. Generally, we've been in this upward trend. But look, I would say we probably have a pretty, a decent resistance level here on that. Okay? We have a decent resistance level right here. We bounced off it. I don't know how many days we bounced off this level. If we break above this, I'd consider that a breakout. We haven't yet. It's not showing on this. And this script or this script, they're not foolproof scripts. Sometimes I'll look at something and that says, hey, that looks kind of breakout-ish to me. But it doesn't show here. Or maybe you look at one of these and you go, well, it says it's a breakout or a breakdown or something. BO for breakout, BD for breakdown. You may see that and you look at it and you go, that's not really my idea of a breakout. Fair enough. This is just an aid for you if you want to use it. I'm not going to be using this all the time to try and find these, but I thought you may find it helpful anyway. Okay. All right. Now, here's this. I'm going to look to enter on the breakout if it breaks out. It hasn't broken out yet, but I'm going to say, look, if we get up here, I'm going to say if we get to 306, I'm going to enter that. I'm going to go long. I'm going to go long call on that if we break above 306. Furthermore, I'm going to say if we go 1% below our breakout point, which is 304.5, so I'm going to go 304.5 times 0.99 is equal to 301.5, 301.5. That's going to be where I'm going to look to exit. All right. Now, am I going to put a target price in there? No. Okay. No. I'm not going to put a target price in there. The reason why is this is a trend trade. Remember, a trend trade we're going to stay in as long as it's continuing to trend up. There we go. I'd say in general, we have a decent trend here on this. I could, if I wanted to, I could draw this line here and say, sorry, this is a terrible line. My hands drawn with this mouse is difficult, but that's the trend. Now, if I break the trend, in fact, this is kind of like an ascending triangle here, I would call this. This would be kind of an ascending triangle for those of you who are interested in technical analysis, okay? But there's that, all right? Now, questions. Earnings is coming up. We're about to hit earnings season, folks. We're going to hit earnings on probably every stock we do. And furthermore, if we're doing a trend trade and we plan on staying in, hopefully this trend stays going for, a couple of months or more, it's almost inevitable we're going to bang into earnings. Yeah. I don't think it has to keep you out of the trade. Do some people try and avoid earnings? Yes, I don't think it needs to. Okay, I don't think that's a requirement for you. So with before earnings, typically implied volatilities are going to be a little bit higher, makes them a little more expensive, but you also have the benefit of bigger moves can actually help you if you get a move up. Now you can get a move down, but there's actually kind of an asymmetrical risk reward on this. There's theoretically an unlimited reward on a long call. The most you could lose is the amount you pay, which is, I don't want to minimize that, but that's just saying, I don't think you necessarily need to avoid earnings here. All right? Okay. Let me go through other questions real quick. Why am I using, because I think a 9-month, why am I using the 9-month chart? Doesn't matter. You can use a 6-month chart. You can use a year chart. I'm using a 9-month because I'm trying to balance visibility for you so you guys can see with the ability to see kind of where we've been. That's the only reason. There's nothing special about that. Okay, why do I not wait for it to break it? You can wait for it to break the high, but to me, this is the dominant resistance here forming that price pattern there, Daniel. That's why I'm doing that. Okay, let's move on. Good questions, everybody. Great questions, everybody. Okay, so let's do the trade. Let's do it. Okay, I'm going to go to trade. We're on American Express. I'm going to look for what we say in terms of our, we said between between 50 and 120 days. We could do March or April, doesn't matter. Let's look at March. And I said, I'm going to look for a delta 60 to 70. Here's a 68 delta, long call. Okay. So it's kind of an expensive stock, 303. That's there. Now, if I go down in my delta, I could go to a 40. Let's see. I can go to that 58 delta, and that's going to help keep me, my risk. I will probably stay with, we're kind of on the borderline of our risk tolerance on that. So I'm going to go down just a little bit to my 58 delta here, close to 60, just to make sure we're within our risk tolerance here. And I'm going to right click on this. I'm going to buy custom with a stop, but I don't want to buy right now on this. Let me just close this down here. Remember, I want to buy only if the stock crosses above 306. So I'm going to change my order from limit to market. I'm going to make this good till canceled. I'm going to click on the little gear over here. And I only want to buy this if American Express marks greater than or equal to 306. 306. Save. Okay. And where do I want to get out? Well, I want to get out when and if. I'm going to do the same thing, mark it good till canceled, click on the gear, and I'm going to say I want to get out if American Express marks less than or equal to 301.50. 301.50. Okay. Save. Confirm and send, and I'm going to read this. Make sure you read it back. We're buying a long call if there's conditions on it, if it marks at or above 306. I'm selling if it marks at or below 301.50. I'm going to send that order, and that order is in. Now, I want to go through another example, but I'm running low on time, so let's do this. Let me just mention a couple. Let's look at, I want to give you a bearish example as well, but let me give you another, I won't do the trade, but let me just give you another potential breakout type trade here on Citigroup. Okay. There was, you know, we're breaking above, I don't know where that breakout script was saying, whether it was from here, we broke out above here, we also broke out above there, but that's another one. Again, earnings is coming up. Ditto to what I said before on earnings. We don't know, but there's kind of a bullish. But if you look at most of the market right now, and you just kind of scroll through on the market and go, you're going to see most of these stocks are going down. Most of these are going down as I scroll through this. You see the red, you can look at the red script. I'm pointing with my finger. That's silly, Brent. You guys can't see my finger. You see the red going down on those? Now, some of them are going up. Amazon's going up. Yeah, there's a possibility there. So some of those are going up, but more often than not, when you're looking at these, I've just seen more that are in the red zone right now than the green zone. Okay. Let's look at some potential bearish type ones. Let's do BLK. So here's BlackRock. So here, notice, today we got double whammy over here. We got a breakdown on the breakout script. We've got a close below the low of the high day. In other words, we went up, we bounced. So we have a bounce and a breakout here on this. So is that a possibility? I think that's a possibility. Very expensive stock, but just wanted to show you that as a possibility. Let's look at Oracle here. Okay, here's ORCL. Here's Oracle. And what do we have on Oracle? Let me scroll down to our scripts. Now, it doesn't matter what the scripts are saying. Doesn't matter. You can, you know, if the scripts may say nothing. They did on American Express. They didn't have anything there, and but our trend going down, got a bounce, got kind of a little breakdown too below right there. So I'm going to go long put on this. We're going to use some of those same rules. I'm going to go to trade. I'm going to go out. I'll go out 100 days here. I'm going to go long put. I'm going to go to my delta, and I'll go here. And I'm going to buy it. Now, before I do this, where's our stop going to be? Well, I'm going to call this as our level, 165.5, I think. Actually, that's 165. I'm going to go 1% above that, 165 times 1.01 gives me a 166.65. 166.65. Okay. 166.65. That's one way to do it. And we could do this the same way we did before. I could go to trade. I could create an opposite order here. And I could go to market, goods are canceled, click on my little gear, and say I want to get out if the stock marks greater than or equal to 166.65. There's but I'm not going to do that because I want to show you an alternative way to do that. What's my entry price here on this? My entry price is $18. Okay. We said we could put in a stop loss, and I'm going to put it in at 60% of the $18 price. So I'm going to go 0.6 times 18 gives me $10.80. I could just use a traditional stop loss here on this with no rules. Let me just get rid of that. Let me just make sure I don't have any. I'm going to redo this. I'm going to create an opposite order. I'm going to make this a stop. I'm going to make my stop good till canceled. And I'm going to say, if this option gets down to the price of $10.80, I'm going to get out. Now, some of you who are maybe newer to options especially are going, that's a huge risk you're taking. Buying at $18 and at selling at $10.80 if it goes against you. Some of you who are more used to stock trading are probably going to say, that's too big. Options are more volatile. You can't put as tight a stop on your options as you do your stocks. If I were to do, say, a $17 stop, it's very likely intraday within a half an hour, I'd just get stopped out on that. Now, stops aren't guaranteed, even on options, but that's how I'm going to do it. I'm doing one contract on these. What's my risk? Well, 18 minus 1080 is $7.20 there. $720, in other words, basically. Theoretically, this could go down to zero. I don't know where that stop is going to get stopped out there. Okay. How did I calculate this is the question, I think, from Isaiah. I went 60%. I just did 0.6 times 18 to come up with that. 0.6 times 18. That was the rule that I used on our sample plan there, Isaiah. All righty, folks, I'm going to send this, but the price has moved on me a little bit. And I just want to make sure I get filled here. Okay, I'm moving this price down a little bit, so I'm actually going to move my stop down just a smidge here too. Okay, confirm and send, and I'm going to send that. We'll see if we get filled on that. We'll let that run, and there we go. All right, folks. As I'm going up, as I'm leaving, I'm not going to do any more trades because I don't have time, but let me just mention a couple others. Bearish trades potential. Bounce. This would be a Kablod bounce. This is a bounce down on a downward trend. Is that a possibility? That's a possibility. No guarantees. One more. Verizon. Breakout down here. And bounce. Kablod yesterday. Bounced down on the trend down. There's another one. Okay? That's it, folks. What did we do today? We went through a sample trading plan for trend trading long options. We gave you an example trade on a long call, an example trade on a long put as well. Appreciate you for joining me. Coming up next, we have Getting Started with Technical Analysis. Thank you, Mr. Cameron, for helping me out, as always. And make sure you follow Cam on Twitter, @CameronMayCS. Everybody, we'll see you all same time next week. Bye-bye.